What's going on with investment capital in travel tech startups? Do things look great, or are they bleak? And more importantly, should you bet your money on travel technology? Hey, I'm Alex Medovoy, founder and CEO of Altexsoft. Welcome to my new series about investments in travel tech. Whether you're a seasoned investor seeking opportunities in new industries, a travel tech entrepreneur, or a startup founder wondering how to acquire capital, stick with me for this series. It's going to be interesting. I'm an investor myself with more than 30 companies in my portfolio. Since I also work in travel technology, this series is an excellent match to explore segments worth your money, demystify some buzzwords that may lead you astray, and take an incisive look at emerging markets. So, go ahead and subscribe to our channel, and let's dive right in. Okay, what's happening with funding for travel, and how does it fit the general investment context? Frankly, I am a little hesitant to talk about travel startups. From the outside, they don't seem to create a lot of enthusiasm. Global investment funding and venture capital have been on a downward trend over 2022 and 2023. It happens across all funding stages, with a 38% year-over-year decrease if we compare the last 2 years. We've seen inflation, climbing interest rates, and eventually the collapse of Silicon Valley Bank. We've also seen layoffs in the wider tech industry after overly optimistic stuffing. Add here the decrease in the IPO market. None of these things inspire investments. The tourism industry is no exception. In travel, overall funding has fallen by about 70%, from 11.7 to roughly $3.6 billion from 2022 to 2023. Add here the fact that investors have been shifting their focus from younger to older startups for years, becoming more conservative and far more likely to put money into established companies rather than throwing cash at ideas. The share of pre-seed, seed, A, and B rounds in travel gets smaller as more and more investments are made in growth rather than new ideas. Meanwhile, the early capital is looking for industries that promise greater traction, such as fintech. Try searching for startups founded over the past year that acquired early-stage investments. You'll find roughly 2 times more companies in fintech than across the whole travel and tourism industry. And even worse picture with unicorns. There are 10 times more financial services unicorns, about 200, than in travel, about 20. Or, if viewed from the technology perspective, the only sector showing growth in 2023 was AI, with a 9% year-over-year increase. Overall, the sector needs more innovation. For example, compare travel to, say, industrial manufacturing or retail. These are much more innovative. In travel, we still have a lot of manual and legacy processes. Okay, things do look rather bleak, but some segments of travel are worth watching, such as those that consistently raise money and, from my perspective, look very interesting. Travel tech startups have raised roughly $3.6 to $3.7 billion in 2023, depending on who you ask. Skift analyzed over 200 of these businesses, acknowledging that the actual funding figure may be even higher. With $18.5 million per startup, it isn't a lot though. But let's look at the most exciting segments here. The most significant funding was awarded to short-term rentals, $676 million. Short-term rentals are separate apartments and homes that you can rent. Airbnb is the segment's largest business. In fact, Airbnb is the second largest travel tech company by market cap. And yet, with such crushing competition, investments are still pouring in here. Why is that? As I mentioned in one of my videos on product management in travel, the pandemic has changed how people travel and stay at their destinations. Today, remote work is a new norm. So, instead of going to a hotel or a resort for a week-long vacation, you can book a house at the seashore, take your family with you, and spend a month there. This form of travel is called a workation. Look at Outside, a company specifically targeting workationers and digital nomads. It raised about $320 million to fund its real estate inventory. Or take Aperture, a platform providing furnished housing to business travelers who spend more than 2 weeks at their locations, which is longer than your average Airbnb stay but shorter than a standard rental. With this stay duration, it's hard to find something furnished, so Aperture solves that problem. Last year, it raised the equivalent of $5.5 million. And no wonder we see startups like Home2Go or Holiday thriving. They allow you to book those short-term rental places. Or have a look at specialty stays with YPO, where you can book Freddie Mercury's vacation home or spend the night in a water tower. Obviously, you have companies that support the industry like Vacasa, providing vacation rental management services, or Hostaway, offering STR management software. STRs are certainly an exciting trend worth paying attention to, because they blend work, vacations, and stay experiences. What you should be aware of is that, just like for the rest of the travel tech, more than 60% of the capital that STRs raised last year was C and later stage funding. Because, as I mentioned, it's hard to get early stage capital. My word of encouragement to startups launching in the STR segment: it's not impossible to get pre-seed and seed investments. But you may have to cross Death Valley alone, hardly getting any A and B investments. If you manage to do that, if you settle on a working business model, most likely you will get your investments for growth. Another large segment raising funds in 2023 includes startups that produce zero-emission aircraft and their components, collecting over $603 million. Green and sustainable travel has become another trend, but I wouldn't go into detail on these startups today. While they relate to travel, they're mostly in the manufacturing sector. What's really thought-provoking is our next segment: corporate travel and expense management. This one is the most exciting segment for me in travel tech in terms of investments. Just in 2023, Skift noticed 9 platforms raising $445 million. Why is that so interesting? You see, travel and expense management has existed for decades. It's a part of a large business travel market. Business travel is expected to hit this year about $1.5 trillion in spending. Over decades, it has developed an ecosystem with companies that act as travel agencies for businesses, helping corporations move their employees worldwide and track their travel expenses. We have traditional players like American Express, BCD, and CWT. By the way, it has been announced that Amex will purchase CWT. While trying to be innovative, the traditional players still leave corporate travel technologically underserved. Consider that these travel agencies for business, or travel management companies as we call them, are still using infrastructure and technologies that trace back to 80s, which is a common thing in corporate travel. The largest players I mentioned are doing their best to modernize, but it's still a long and complicated process. The new players also come up with modern technology. They offer online booking tools with integrated and seamless expense tracking, challenging existing players and raising substantial funds. Navan, Travel Perks, Patnana are just a few startups that zero in on redistributing the market. While I believe the next big travel tech business will be about corporate travel, we are not there just yet. Another segment I'd like to highlight here is hotel tech. About 30 startups raising $274 million doesn't seem like a lot, but if we look at what's happening here, we see a similar picture to corporate travel. We have large and established property and distribution management players, like Oracle. We have tech infrastructure tracing back to the pre-internet era, and so much room for innovation and improvement, from how hotels bundle their rooms and services to how they price them. No wonder startups are challenging the existing dinosaurs and their market share. To learn more about what's happening in hotel tech, watch our video on attribute-based shopping and read our article on open pricing. We've also looked at about 40 large startups. Each of those has received more than $100 million in funding over the post-COVID years, just to see how those investments are distributed across segments. These include 20 unicorns from Get Your Guide to BlaBlaCar, and we have a similar picture here, with short-term rental and accommodation platforms leading the way, followed closely by corporate travel and expense management platforms. That makes these segments important to keep an eye on. As I said, my impression that the next big thing happens in corporate travel. But let's take a step back. We see that most innovation is in travel distribution and customer services. The trend is to slowly but surely reimagine transactions between travelers, resellers, and suppliers. This challenges how things have worked for decades, how the flights are booked, expenses are reported, or properties are managed. That said, what are the key things to consider for an investor on one side and for startups striving to raise funds on the market on the other? There are three main things: prototype, business model, and go-to-market strategy. And let's talk about them. Gone are the days when a startup had a great team and an idea, a combination sufficient to raise seed funding. It's almost impossible to get investments in ideas anymore, at least in travel tech. You also know that growth at all costs doesn't cut it any longer in 2024. What does work now? What does a healthy startup look like? First, it's a working business model. How exactly does the startup plan to make money? The sales model must be repeatable and scalable. Repeatable means that business is not relying on one-off revenue injection, but can continuously generate money. Scalability means that there is a way for a startup to add more new clients with a positive unit economy, generating not only revenues but profits on a scale. Let me give you an example. Last year, I was at the Focusrite conference, and John Madsen, COO of VKU, presented its new product, Trip Fusion. It's a tech solution helping hotels upsell spas and other wellness services in a single interface. While hotels chronically undersell their ancillaries, there is a business problem, so it's a real opportunity. Trip Fusion won People's Choice Award at that conference. Their business model was to get recurring licenses from hotels, transaction fees for ancillary bookings, and one-time setup fee. This is certainly a repeatable business model that has great chances to become scalable. Another critical component is a go-to-market strategy. How will the startup bring its product to a wide range of customers? How is it going to establish itself on the market? Even if you acquired a couple of enterprises and multiple smaller businesses as customers, how exactly will you bring that number to, say, 15 enterprises? How are you going to sell to 100 smaller brands? How do you scale? Hiring more salespeople is not a go-to-market strategy just yet. There must be a clear and calculated way to enter and establish the business on the market. Eventually, there must be a prototype, the early version of a product that you can try, that proves the concepts and gives the look and feel of your product. Please check the video by my colleague Romana explaining the concepts of prototyping in more detail. And there you go. The reality of travel tech investment growth hasn't met high expectations. Investors are, and frankly should be, more conservative. We see that as less and less early capital ends up in travel. And unfortunately, there is a scarcity of investors and institutions at seed, A, and B rounds. That's why few startups survive this death valley and reach the C and D rounds. For example, Spotnana managed to cross it relatively quickly from seed at the beginning of 2020 to Series B in 2022. Or Numa stays with pre-seed in 2019 and Series C in 2023. Viable startups now must have a working business model, a solid go-to-market strategy, and a prototype. Nobody throws money at ideas anymore. But there are exciting segments including short-term rentals, corporate travel and expense management, sustainable aircraft, and hotel tech. That's the very reason we are here. And we will be talking more about opportunities in this series. Thank you all for watching. Please let me know your thoughts and tell me which topics you would want to hear about in travel tech investments. Please like, subscribe, and see you next time.